Happy Saturday and welcome to the end of week review for this week. And this week is week 41 and we are in Q4, which is right here. We are in Q4 and we are in the second week of October. So we have we go in the last 3 months before we close up for 2025. And for this week, we do have five full fighting, 5 trading day, 5 trading day of the week from Monday until Friday. But next week we only have 4 trading day because the Monday is the holiday here in the US. It's Columbus Day, and that's the reason why we're going to review and see why Friday there are big dump or sell off. And look on the daily charts, it tells us that exactly where it's gonna dump. We learn the hill lesson. Okay, so let's go to normally you're gonna see some economic data were delayed because of the government shutdown in the US. So a lot of volatilities in the markets that at least we can tell. So now look on the Monday, right? So next week is gonna be here. This week we're gonna have a CPI data come out, and it looked like they're gonna provide a CPI data, right? It's a CPI data for next week, October. So not next week, is that right? So October 24, not next week. Wow. Somehow we thought they're gonna be on next week, but the following out is 24. Oh, all right. Oh no, is that the CPI data? Yeah, inflation. So last month is September 11, but for this month it's October 24. Oh, normally it fall on Wednesday, but lately they changed the day of release. Normally for on Wednesday in the midweek, but on September it fall on 11. But this month October it fall on Friday. Very strange. Normally Friday is the non-farm payroll, and then you have a CPI on Wednesday, and then the FOMC meeting is also Tuesday and Wednesday. But anyway, that's the change. We have to go with whatever the government or the day that they set to release anyway. All right, so go into the Monday. Here's the Monday. The swing start we take at the beginning of the Monday. So you see there's on our left side is the monthly, and on our right side is the Monday, and our left side is the weekly. And we can see that the setup right here. What do we see on the weekly? You see the level right there. So test from above, break and reverse. That is the type 2 right there. That's what we anticipate when we see that on Monday. Let's do the right up right there. Let's do a right up right there. So we open this with a snipping tool right here. So when we draw that level, we have in mind that it's gonna be test. You see that test from below, and then break it, and then look for a reverse. Look for the reverse, and it did happen. Amazing. And you know what? We didn't follow our plan. We so caught up, and we did not follow the plan, and we make a bunch of beautiful mistakes, and we blow up our account again. That's so much fun right there. 2 will be break, and break. So right here you have test from below. The first step is you test from below. This is a type 2 right here, and then you break it, and then you reclaim right away, reclaim or reverse. So that's how the price action is for engineer. That's for better way to say that. It's manipulation way that reclaim. Yes, so reclaim on week 40. So we are on week 41, is that right? So week 41 right there. So we have week 39, 40 and 41. So that's what we see. That's what we start on Monday. We see that setup, but we don't follow through on the lower time frame. That's where we here and we review, we reflect, and we learn. We make mistakes. That's where we learn. And don't take mistake as something that negative. Mistake is a stepstone to transformation, to be a better version of ourselves. The more mistakes we take, the better. So basically mistake is a blessing in disguise right there. So it's for breakout type 2 right here, and in this case it's reversal or retracement. If that's right, it's retrace. We're not sure it's gonna be a reverse, but it's a retracement in this case. For breakout, it's the start of retracement, not the end. All right, retracement start. Let's give us another clarification right there. So for a type 2, you only have a step called test. Either test from below, which is a short setup, or test from above, is a long setup. If it tests from above, a long setup, it's likely gonna be the retracement end. In this case, retracement start, right? But if this retracement turn into reversal, then it's become a reversal. But otherwise, it's going to be a retracement star. It's test from below, which is week 39, right? It's on week 39, and then it break it. The break happened on week 40, and now week 41, which is this week. The current week it reclaim. Do we have that set up before? Yeah, you see maybe right here it test again and it break like twice. You see the wick right here, it tested level twice. So the reclaim is happened on week 41 or reverse right there. So that's the type 2 we identify. Well, at the beginning of the week, if we don't know this setup, we don't know what looking for, we have no idea that the claim or reclaim or reversal is forming. We don't know. For novice trader, they thought that it's gonna be rally, but exactly at that moment, the market maker is fool or trap the bull. The people go long. It's gonna flip. It's gonna flip. That's the whole idea right there of the 4 breakout. It's gonna be 4 breakout to the upside. It make like it's gonna break out to the upside, but actually it's a 4 breakout. That's what we call 4 breakout, and this kind of type 2, because test first, break and then it reclaim right away. That's it, the setup on a weekly. Let's save it for now. Alright, we just save this and let's review what we mean by type 1 and type 2 or type 3. Yeah, we need to make. Alright, let's take a little bit of time to review 2 setup and another setup. But mainly for these 2 setup is a reversal setup, and we call it in type 1 and type 2. So for the type 1 is on the left, and then for type 2 is on the right, and on the top it's going to be the short setup, and on the bottom is a long setup. Basically it's very simple. We simplify this. So in the key level can be high time frame or in the low time frame also. So the key, when we identify the key level, we're gonna see this is how the price is engineered, liquidity engineer or price engineer, and how the algo run it. So when it's engineered the liquidity on the, in this case engineer the liquidity on the sell side enough, then it make this move in order to reversals, which is a short setup right here. For the type 1, you have break a key level and then it tests from that level, and then the next thing you know, it's gonna reverse. It take all the sell side right here, all the low right there. That's the sell side liquidity. So basically the first 2 move is engineer sell side liquidity, and boom, it reverse or reclaim in this the candle by sell we call it reclaim, right? But you can call it reverse also, but we call it reclaim so we can keep from the context that another thing that we see that if it keep rally and then it reverse from here, that's what we call reverse rally. So we saw that the Taiwan happened a lot in the reversal scenario, and the type 2 is happen a lot in the continuation. Basically the type 2 happen at the end of the retracement, right? So you have the move, first move, and it's retracement, and when it end of retracement, boom, it make the next rally or the next expansion, and that's it continue to trend. That's where the type 2 is very prevalent. It happen more of the time for the type 2. But for the weekly, we just show you, in this case it's just the reversal or the start of the retracement. It's not at the end yet, so it just started, which is type 2 right here. Let's say 80% the type 1 is in the reversal. Type 2 also in reversal, but about 20%. Mainly it's a continuation. So that's could be 80 20s or 70 30. We don't have a solid stack for this right now. It's just based on our gut feeling right now. We see that, but we will try to keep the stack on this. But that is another topic right there. So another type that we trade is called type 3. There's two types right here, and the type 3 is a little bit different, but it's still a derivative or a deviation from this two key setup. So for the shorts type 2, you want to test a break, is test from now. For the type 2, you want to test first, right? Test from below, break and reverse. That's what right here we see. Even though the test from below in here is the up close candle, but in this case it can be I think it's better, right? We may fix this. We can redefine this. So the test from below, let it should be a what? Should be a down close candle, which is in this case, this scenario is a down close candle. It may make more sense that the down candle, so we can refine that. So that's the two setup. Then another setup that we call type 3. Let's look at type 3. Here's a very beautiful or very typical type 3 reversal. We call type 3 is our term, our language, but for the general public, they have another term for that. It's called double top or double bottom. In this case, it's a double bottom. So basically, it break right there, and it's reclaim or reverse. Right? The language the same. Reclaim, and then it break, and then it reclaim. So that's it. Do twice like that. That's the double right there. So this is the first bottom, and this is the second bottom. So that's called double bottom. But in some scenario, it can be triple bottom or even quadruple. So it can be not only two bottom, but it can be 3 bottom, 4 bottom. I think in this week we saw 4 bottoms forming. The more bottom forming, the better, because that means they engineer a huge amount, because it takes time to trap, to engineer liquidity. The more it trap or it compact, liquidity, then the better the expansion gonna be, or the big move, which is very explosive, very fast and furious. So that's the type 3 we're talking about right there. But however, we need to simplify on the drawing like this. We will try to have it maybe next next week we will try to do this, draw something like that, similar like that. So that's three type of a reversal that we trade right there. So at the end, not at the end, we misspoke right there. At the beginning of this week on Monday, we saw this. Let's say we follow with our see right there. So that's the weekly. Now look at the daily. We check the daily. We take. So look here. Here is. So we have ILMC, and then you know that this is the CBI. Yeah, right. Yeah, that is the CBI Monday range. We mix both. Actually, this range is a non-farm payroll, not CBI. It's non-farm payroll, which is the first Friday. The first Friday of the first trading week. That is a non-farm payroll range, and before that, that's the range 5 OMC meeting. So from here, you can see that this is the Monday, right? So we see that level, right? We see, all right, it tests from below, it break. So the Monday can be the break and looking for a reversal on Tuesday. All right, so that can be a reversal on Tuesday, which is play into a weekly right here. You see that? So let's see if the reversal happen. Right, so we anticipate that means the Monday gonna be a up close, and then the reclaim or the reversal gonna take place on Tuesday. All right, so let's see what we see on Monday. So here's the 15-minute time frame we take at the beginning of Monday. So we see this is the level high time frame, which is daily right there. So we see that the last Friday PM is a huge range, and then you see the Asian and the London both in that range right there. So ideally you want to trade out of the range. You don't want to stay in the range right there. But at least we can see that the price is far away from the open range right here at 18s. So from here we'll love to see if you take out the high right there, and then we can engage the short if the setup right there to reverse. Otherwise just stay number. So that's the whole idea. Alright, now let's watch the tips on Monday. Just rewind the tips. Alright, here we go. So it's October 6th, which is the Monday. So that right there. So now let's make this a full screen and see how the price move. Alright, let's fast forward. Let's see how wow, so 8:30 okay. So to keep in mind, right around the high time frame level, right, the level that we see is test from below. So we want to see it break the level on Monday, and then it reverse on Tuesday. Okay. It's not 930. Yes, it test level again. So we fast forward right now. What happened? Yeah. Let's go back. Yep. So let's go back right here at 9:30. Just right before 9:30. So it's 9:29. Alright, so right here we see where the liquidity. You can see that the equal low right here, it may go down and check the liquidity right there. And you also have the liquidity up here. So, and you may have liquidity down here also. So let's see if we take the liquidity down here, it may reverse. And if we take liquidity up here, it may reverse. Okay, so let's fast forward. Okay, and keep in mind the high time frame level right there. So you break, you break that level. The level only tests from below and high time frames. You want it to be reversed from here and reclaim that. So that's our 9:30 candle. Let's see. Boom. Okay, so you see that it take the sell side liquidity 2 times in a row right there. 1, 2, and I'll take the London low, and also it fall into the open range right there. So if you want to go long early, then this is, yes, you see that? That's the idea right there. Who would thought that right there it could be a long? Yeah, look at that. It look very scary, right? But actually, if you understand the liquidity engineering, then you know that is could be a long setup. You know why? Let's look right here. Right, we all anticipate that there are a sell side liquidity here. They're gonna rip that. See that? Right, the high right here, and rip that, and if go into the fair gap right here or void gap, and look at this candle also. So right here, all right, well, right here you see this. Yes, that is one of the key level. Is that right? Yeah. So we see the level break, and then it reclaim, it break, and let's see it reclaim or not, right? So then right here we have a double bottom, right? You yeah, you break it, so reclaim, break. Yeah, if you go further right here, you can see that it break that level. Let me it you want it to be a double, then you have to look into the left just a little bit more. So you can see right there. The reason why we took this because it's the candle after expansion. But you look in the level, you see that it break the level, right? And it's reclaim. So that's the first bottom right there. Here the second bottom, which is break, and then it reclaims. So that's the second bottom. But in the second bottom you have the void gap right here. That's reason why this guy come down here to fill up that equity, and then it reverse. Yeah, so right here, if you look at the level, you can see it. So if you have break, and then you have reclaim, and then you have break again, and then you have reclaim. That is the type 3 that we are talking about. Alright, here's our write-up for this setup. So you see that the formation for the type 3 is already formed on the open at 1800. So that's the reason why we call it reversal of 18th, because it break, it reclaim, it break, and then it reclaim at 1800. And then at 10 o'clock, always pay attention for the 10 o'clock, because the 10 o'clock is where it get a flip. Most of the time it get flip. Not more of the time, but if you pay attention, if you see this, the candle at 10 got flip, then you know that it's gonna be a very high quality setup right there. So it's, you see it go and revisit this area, this range right here where it's break and reclaim. It revisit one time, it looked like it's gonna break through, right? But it's flip. That's where the message is coming. And watch the tips right here. You see it's flip right there. Then right there we can go long. We can go and go long for the next candle. If we want to go early, we can go early right at the 10 also. Because we already know that the 4 breakout already formed, the double bottom already formed. So this one is just the last visits or revisits before it flip and it go back up. We're gonna rate this the buy side liquidity right there. Okay, so that's what the tips again. See that? Yeah. It's got flips. So if right here is let's go back right here to the minis. Okay, so the minis we see, look, the flip right there, you see that? That's the flip. You see that? Looks scary, and the flip. Yes. So the minis a flip, we can go long. Let's see. Yeah. See that? We can go long. Right. So let's see. What is that? So fast forward right, I see it's flip, and we can go on at the 10:15. We go and go along right there, and yep, it got flip, and then we can go on. Actually, it looks right here when the 15 is, yeah, it looked like that's right, but you can still go long. Yeah, so we can go long at the 15 right there, and put just stop loss right there. Let's take screenshot right here. So that's where wait for that flip, then we can go in. We can go in at a 15. Yeah, we can go in at a 15 right there. Okay, so here's our right up right there. So you can entry long right there. Because this setup already there. Already formation, it's just rephases. Alright, now keep rolling the tapes to see what happens next. Right, back and forth a little bit. Yeah, at the 10:40, 10:30, it looked a little bit scary. But just stay in the trade, then you're good. You wait until it go and rip the opposite liquidity, which is the buy side liquidity, then you can go. Yep. Yeah, look scary at 12:15 right there, 12:15. Well, if conservatively you can take the profit at the range, the high range of the candle. This is the key candle at 9:30 right there. So 9:30 is on way at 12. I mean at 10. If it flips and it close above the 9:30 low, then it gives you an idea that it's gonna go and hit the range of the 9:30 high right there. So you can take profit right there, level 1 right there, and you can invest the rest run into the high right here, which is very close, right? Very close. Why so slow right here? Yes. Yes, you see that? It hit the high right there. Then we good to go. It's just at 12, now at almost 13:20, which is a 1:30. So the target is just right there. Wonderful right there. So that's the only trade that really good on Monday for us. After that, you see it's gonna be retraced. Let's see. Yeah, it is a little bit right there. Numbers. Let's see how. Yeah, it start retrace. Start retrace. See that? That's right. Yep. So that's it. So the good target is gonna be right here at that's it. So right here the target, yeah. So the candle 1:30, yeah, 1:30 is the best target. Beautiful right there. It take out it take out a high right there. That's it. So you should be out at this moment. That's wonderful. Yeah, right there. All right, so we put them all together. So right here, put all three together. So at first we identify around 10 right there on our left. We already see that the double bottom is already forming. So if right here the 10:30, right at the moment it looked like gonna break it, it's gonna going down, but actually exactly that moment it gonna flip. It's just a revisit that level, and when you see split, then you can go along and make sure that the candle at 10 o'clock close above the 9:30 low. Then you can surely go along and aim at the high rate here, equal high rate there. All right, if you look in the different angle right here, if you mark the high of the open range 18, you can see that the setup type 2 is forming right here, which is a continuation, right? It's the first leg up expansion, and you have retracement right here, and it's just one leg, 1, 2, 3, 3 leg retracement, and boom, is make another leg up, particularly right there. And in this case, the type 2 is continuation right there, which is a retracement end. Like we mentioned earlier, that where a lot of the type 2 happen when the retracement end, which is continuation. So you have a test from below, test from above, in this case the 930 test from above, that level, you see that? Test from above, break at 945, and the 10 is reclaimed right away. So look at the angle, we also see a type 2 right here. Look into the left, we already know that the type 3. So when you have two of the pattern that overlap or confluent, then you have a very high quality setup right there. Alright, so that's good enough for Monday. Now let's move on to Tuesday. So here's our Tuesday, the weekly on the left right here. So it's still not flipped yet, right? Wait for the flip. And if we are a seasonal or experienced, we can start build a short setup right here. Because it's kind of flip. It's likely to flip. Yeah. Because at the 9:30 of the Monday, you already see that it's huge, soft, very big candle right there. Yeah. Okay, let's look on the charts 15 minutes right here. So let's see, we want to see if that's the 930 is really a threshold for the candle. So Friday, let's put the look back or land maybe 100 to see if it's so up, because it's the outlier. Alright, so we just zoom out, we can see that. So for last Friday, and we can see that it's a huge down range right there. It tells us that something gonna break right for this week, because we look back like 100 candle, which is so basically here we set a statistics that track to see from 8 o'clock into 14 to see what is the candle range right there. And we can see that the 9:30 on Monday set the tone right there is a huge down close candle, and the range is about 23 point right there, which is 3 standard deviation plus the mean right there. The threshold is 24, so it's right there at that threshold. That means that's a huge signal for us to get ready and short. So whenever it's above there, get ready and short them. Yes, so this is right there. Wow, you see that? That's just about the RAM right there, and all the above the RAM is just the Korean engineering right there, and boom. We did see the reversal right here happen on Tuesday. Did it happen on Tuesday? Yeah, let's really go to the Tuesday daily CC. Yeah, so here the Tuesday daily. So we can see that it's touched from below break and reverse. So early we can see that that is the signal of reverse right there. And now go to the Tuesday, the 10th, and see. Alright, here's a slope like on October 7th, which is Tuesday. So keep in mind that on Monday we see that the Asia and London is in the range of the prior day PM, which is Friday. But on Tuesday we start see that is it breaking the low, right? The Asia breaking the low of the Monday PM, and London is right around there. It just sweep the south way right there. And let's see right here. Let's fast forward into the 9:30. And keep in mind that the open, yeah, this is right at the open. This is a huge down move. Yeah, let's see. Let's see how it go into the 9:30. Okay, so what do you see? So you want is to go up there and rate. Wow, before 98 already rate the cool. It's really cool. So it take out the Monday high. Interesting. Okay, and go to 9:30. Wow, so right there before 9:30. Okay, so 9:29 right there. So we thought that it's gonna be after it rate the buy side, we thought it's gonna be reversed from here. But interesting that it flipped. So the flip is engineered to boom. You see that? Look at the 9:30. You thought it's gonna come down. Look like going down, right? Look like it's gonna going down right there. So whoever chase this 9:30 short can get caught up right here. 9:30, right? It look like it's coming down. It reversed, you see that? But it flipped and boom. Yeah. Okay, so look at that. So after the 9:30 right there, what do we see? We see the 9:45 a flip to the outside. Yep, and then the 10. You remember that the other on Monday, the 10 have to close above the 930 low. Let's see it to this time. No, it did not. You see that? The 10 did not close. So maybe it's short. Yeah. So all the way gonna break the high right here, which is, you remember, test from below. The on high time frame, the Monday is what? The Monday is breaking, and the Tuesday it's gonna reverse, and that's where the reverse coming right here. That's where the reverse coming right here. Exactly. Boom. Wow, look at that. So that exactly happened. That exactly happened for the reversal that we are anticipate. So it manifests itself on the weekly. It goes to daily, and now it's go to low time frame 15 minutes. Okay, so just pause right there, and we go back to the daily time frame early on Tuesday. You see that? So we anticipate the type 2 right here, which is test, break, and reverse. It's already break on Tuesday. It'll break that on the Asian and the London, and then boom, at 9:30 is move up here. It take the liquidity right here, the high of Monday, and then flip, boom, is going down. See that? It take out the high of Monday right there, and boom. And look at the 10 o'clock. It did not close above. It did not close above the 930. The 930 low. So it gives us a bearish signal right there. Ready to go back to the tip right here at the 10, right? 10 o'clock, and look right there. 10 go to 10:14. Finish at 10:14. Yes. That's 10:15 for me also. So right here, what do we see?